still staying on that tensions on the Red Sea. Global shipping industry is bracing for the prospect of living without its most important trade routes for weeks, even as the U.S. works to pull together a task force to stop Houthi militants in Yemen from attacking commercial vessels. Shippers are still waiting for details, and they worry about implementation that the Houthis are attacking ships to show support for Hamas in its war against Israel. Let's delve more into this. We just heard Leslie there tell us about the impact on shipping companies. Of course, you also have issues of insurance and every other commodity that is affected right there. And we are having this conversation with Ted George, is a Chief Narrative Officer with Clearance Advisory from the United Kingdom. Hi, Ted. Good afternoon.
Great to be back. Good afternoon.
Good to have you back. So we've seen, or, at least read about the impact of this tension on the price of oil, supply and price. Now we are talking more about the ship. The ships are being rerouted. And of course, as Emily said, that's more hours on sea and more costs that will end up, at the footstep of the consumers.
Absolutely, and we've seen it already coming through in prices. If you imagine during the COVID lockdowns, there was a dramatic spike in the average cost for a container. It went from around $2,000 for a typical container to around $10,000, a five-fold increase. But in the last year and a half, as we've seen global supply chains recovering, it's back to down under $2,000. And so one of the first things we've noticed is just in the last few days, that started to spike again. The price is rising again. And this is a real concern. Now, it probably shouldn't affect Christmas in Europe. We saw, for example, a couple of years ago when the Ever Given ship got jammed in the Suez Canal for 12 days. That really did result in some people not getting their iPhones or their Xboxes for Christmas. That's not a worry now. Everything being sold for Christmas is already here, but we're going to see the knock-on effects coming through. And certainly it's not just, for example, BP saying that they're not going to be sailing through that area now. We've just heard that Greece has ruled that all of its ships shouldn't sail through there. Now, that's about 20% of global maritime traffic. So the knock-on effects are coming through. So far, we've seen, let's say, oil prices, they've nudged up a bit. They're back to $80 a barrel. That's roughly where they were before Russia's invasion of Ukraine. But of course, everyone's aware where this one could go. We're all watching very closely, because if that route is effectively shut to international shipping, it could have a huge knock-on impact. Availability of goods, but pushing back into prices, and dare we say, inflation coming back up again.
And talking about Europe, will this have an impact on the energy prices?
Absolutely. I mean, we already heard that we've seen gas prices going up again. As you can imagine, Europe went through a dramatic shock back in February 2022, when effectively Russian gas was cut off, a mixture between the Russians retaliating to sanctions by Europe. But if you bear in mind, Germany at the time was dependent for something like 90% of its energy needs from gas from Russia. Now, there was massive investment, particularly in LNG and regasification in Germany. They've reduced their dependency on Russian gas to about 2% now. But of course, a lot of this LNG gas was coming through the Suez Canal and through the Red Sea. So if that's got to be rerouted around the rest of Africa, a lot of it in ships that are never intended to sail this route, yes, that's going to have an impact. So certainly we could see, as the winter comes in, a rise in gas prices again. That's the last thing that the European economy needs.
The last thing that everyone wants, Ted. But what about insurance? Because, I mean, this ship we're talking about, they're insured. So, I mean, the risk increases. Insurance companies will also hike their premium.
Absolutely, and we've already seen that, by the way. We've already seen premiums being hiked, probably by 10 or 20-fold from a very, very small level indeed. And of course, it's not just about the insurers. I mean, if insurers say we will not insure shipping in this area, that cuts out a lot of trade. But on top of that, even let's say that if there is insurance, how many pilots are you going to find? How many shipping companies who say, yeah, we're going to put our ships at that risk? We already have an example of how this happens. If you think of the whole Russia-Ukraine situation, there was an agreement to allow grain to go through a protected corridor, but that deal ran out. Now, Ukraine has been managing to continue to make shipments, but only a few weeks ago, a ship was hit by probably a Russian missile. The pilot was killed. So are you going to be the one who says, oh, yes, I'll go, even though supposedly we have protection? So, yes, it's a big concern. Essentially, if insurers say we won't insure, that cuts out 90% of shipping ever leaving the port.
Wow, so sad, and sounds like if this is not stopped, it's dark days for the world in the coming months. It's not a good way to start 2024, but we hope it doesn't get to that. Thank you so much, Ted George, for sharing your perspective with us this afternoon.
My pleasure.
Let's take a break. When we come back, we'll stay, some markets and then the African continent.